All right, I'm going to teach you something funny about Wall Street today. Actually, it's kind of funny, and I guess we're really kind of taught this as kids. All right, so in Wall Street, and probably everywhere else on the planet, there's a general rule. When something goes wrong, blame everybody else but yourself. So right now we're in what's called earnings season. And this is where all of the Wall Street, the publicly traded companies, will come out and they will report their earnings for the first quarter. So from January 2017 to the end of March 2017, they're going to come out and say, well, we made so much money, we expect to do this much going forward, here's what we're returning to shareholders, all that stuff. Now, there are some highly paid analysts on Wall Street that their job is to analyze a company and come up with their assumption as to what they think the company will make. Their earnings per share, their overall revenue for that little time period there for the first quarter. And they're usually pretty good. They guess pretty much spot on after all the research they do. So if a company misses their earnings, that's what that means. They're basically saying that the company didn't live up to what the analysts thought that they should do. Now, if that happens, usually the stock price takes a bit of a hit, sometimes just for one day, and sometimes it's a long drawn out thing. Just look at Lululemon. Now, what happens is they have a conference call. And on the conference call, when they miss their earnings, the CEO and the CFO, they have some pre-made statements and then they'll take some questions. And a lot of times they'll just be like, oh man, like stuff happened. It wasn't our fault. We'll do better next time, of course, but you can't blame us. It's this. If everything's cool and they did better than what Wall Street had expected, or if they did as Wall Street expected, then they pretty much just sit back and they say, yep, we did what we did, and they take questions and it's pretty much a celebration rather than a blame game. Now, when a company misses their earnings, they will blame anything and everything besides themselves. Now, probably the most common one that you've heard of comes around Christmas time. So all of the retailers, we expect them to sell a ton of stuff during the Christmas holiday. So when we get into January and they start reporting, if they miss the earnings expectations, then usually they'll try to blame it on a snowstorm, a power outage at one tiny little mall in, Hoboken, New Jersey or something. And they'll do anything to say, well, we had great things going on. It was just that because of the snowstorm and the canceled flights and stuff, we just didn't sell as much as we could have if there was more traffic. The problem is Christmas comes at the same time every year. So we all know what to expect from companies around that same exact time. Here's the deal though. Easter doesn't always happen in the same month. Sometimes Easter is in March, and sometimes it's in April like it is this year. That means that maybe a company gets to include it in their first quarter earnings, and like this year, they won't get to include it in that first quarter earnings. Now you say, well, what's the big deal? It's Easter. Maybe it affects a company like Hershey's. Oh, too bad. They didn't get to sell all the chocolate in March, but April should be good because they're gonna sell it then, right? Actually, 70% of consumer companies will say something about Easter either helping or hurting their earnings, likely hurting because Easter is going to fall on April this year. And according to CNBC, every single sector of the market has a company that mentions Easter besides telecom stocks. Every other sector out there will say something about, oh man, Easter, normally it's in March and it's in April, so, we couldn't do it. Now again, if it's a candy company, all right, that's to be expected, right? I mean, candy, that's what you do for Easter. But every other company, come on. But gardening companies have blamed Easter for falling in April and messing up their first quarter. You have theme parks that'll take the same blame and be like, the bunny's fault, it's not our fault. You have alcohol companies that'll say the same thing. We should have sold a ton of alcohol. Even Victoria's Secret, which is Limited Brands, that's the public company. But Victoria's Secret blamed Easter for an earnings miss one time. Now the funniest one though is actually from spice maker McCormick. You pour that on your steak and stuff. They actually said that having that late Easter hurt their earnings because it affected how the Hispanic population came out and bought spices. I don't know if I'm offended by that or if that was funny, but they said it. It's a true story. Anyways, in the coming weeks, we're going to get earnings from companies for the first quarter, and odds are that a bunch of them are going to say something about how Easter being in April hurt them and didn't help them. Well, you know who won't blame someone for poor results? This guy right here. At Jazz, we manage your retirement accounts. We specialize in picking the right investments for you and your plan. If you'd like to get started, go to jazzwealth.com. Up at the top, click Invest Now, and I will personally follow up with you to help you open or transfer your account from wherever it might be. If you have more questions, if you want to agree or disagree, put a comment in the comment section below, of course, after you hit the subscribe button. If you have any personal questions you'd like to ask me, you can always email me or contact me directly at